Hello everyone, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves one question: what happened today? What does it tell us about the coming ones? Do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel L.A. Little. You can catch it there, subscribe, contents push, you'll be notified. As far as these markets, notification, I think today might have been a notification that they've done about as much as they want to do. We had the NDX slightly higher. Russell was leading it, but you know the Russell's been trailing. Everything kind of sold off in today. Actually, you know, they got their bump up this morning, sold off, rallied back, sold off again. So look like they're kind of petering out up here. And we'll kind of look at why we think that. Gold up today again, silver as well. Oil down slightly, dollar up. Not big, but dollar up. Let's look at the actual indexes, and I'm going to start with the over in Europe, because as I've said before, I believe Europe is what's driving us, not us. And so if I look at Europe, they got a bounce today. I don't have the volumes in on them yet. The volumes look like they were kind of light today, though. You're coming back into this high that had volume on it on the CACs, 5106. You got over it, stayed underneath it, though. That looks like it's almost a failure at this point. The swing point low is where it was going to try to get to. It may take it a little while to get there if it's going to get there. 5132 is that number. If I look at the DAX actually got up into that swing point low. There was actually two of them. The lowest one was 11,619. I got into that one, stayed, well, it was 0.85, actually stayed in it, barely. Also got into this one, and again, the volumes look light today. The low here is 11,674, and I actually didn't get to it, 11,656. So just starting to get into the zone, the resistance zone on the retest regen. It's coming in within 5 bars. That means it can get to the backside. That would take it up to 11,849. We'll see if it can get up there. It's struggling though, and it looks to me like it's going to continue to struggle. If we pull over and look at the Hong Kong market, that one got a little bit of a pullback, nothing special. And the same thing, actually, the Hong Kong market, a little bit of a pullback. In the Shanghai market, actually pushed a little bit higher. Let's pop over to our markets, and I'm talking about the domestic markets, U.S. markets. S&P 500 pushes up again, nice big push off that. There's a takeaway bar, you get a push, no volume whatsoever as it gets up here to the highs again. Looks to me like it's going to try to fail one more time up here. And if I go over and look at the NASDAQ composite, you can see the spike up, right? Spike up, goes up higher, comes back, test into this high. That was March 20th. That top was 50.34. You got into it, you close underneath it, you got less volume. Looks to me like it wants to come in. NDX, same thing. NDX goes up, ugly candle, no volume, over these highs, closes under them, I believe, 44.83. We close at 44.82. So again, looks like it wants to pull back. The Russell, now the Russell tried to get back to the top of the latest breakdown bar, didn't quite get there, ugly close, no volume. This too looks like it's going to struggle to go higher. So in a nutshell, when we look at the indexes are struggling. As to whether they'll pull back tomorrow or not, there's a couple more things we need to look at. When we come back, we'll do that, and we'll actually look at a viewer question that's pretty interesting. I'll be right back.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, He has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
Okay, as we come back here, I'm actually going to switch over and take that viewer question first. The question had to do with the spread between the TLT, which is in black, and the junk bonds, which is up here in kind of a green. And the issue was, or actually the trade was, is hey, should we buy the TLT, right, and short the junk bonds, right? And you can see here the spread has widened pretty large at this point. And I'm on a 3-month time frame right now. And so, hey, on first glance, looks pretty good. Looks pretty interesting, right? Pull it back though. Pull it back to say 2 years. 2 years, you can see how the TLT has totally outran the junk bonds. And now, if you think about what we're talking about here, we're talking about a relatively safe instrument in the bonds, right, the TLT, and the junk bonds not so safe. Matter of fact, they're called junk for a reason, right? And so, if this market were to sell off, the junk bonds are going to get hit. And conceivably, the TLT should go up, although I'm not certain that will be the case anymore given all the craziness in this market anymore with respect to what quantitative easing's done to these markets. But ideally here, these would sell off, these would probably go up. That's if the market sells off. We don't know if the market's going to sell off. It certainly is struggling, and it's not really, I don't see a large sell-off yet, but I mean, that could be in the cards here at some point. But the point of the matter is that if you pull this back and look at it at a different time frame, that spread looks a lot different. As a matter of fact, if we bring it back, say 10 years, and then pull it into where the junk bonds began trading, you can see there's only a couple times the TLT has actually traded underneath junk bond levels, right? And back here, again, if you look back at the last crisis, bonds spike, junk bonds drop. And so that spread makes a lot of sense if the market's going to drop. Back in 2011-12, you had the same case, right, where the junk bonds got hit on pullbacks in the market and the bonds TLT went up. And I'm not sure why this one, because we really didn't have any pullback of seriousness in this area. But the point is that at 65%, 45%, these could drop 20% just to get back to these levels that we've seen them trade at before. So when I look at it on a very long-term perspective, I'm not sure that spread trade makes sense, at least not yet. And so that was the question. That's kind of the answer to it. And let's turn our attention back to the market in the final thoughts. Okay, to wrap this thing up tonight, one of the things that I focused on last night and we talked about was that more than likely we were going to see some sort of a retrace here off this 2-bar reversal on the euro. And that's exactly what we started to see tonight, or today, was a pullback off that level. Now, I also said that probably where it's going to try to head to is this retest regen. And as you can see as of tonight, you may be a third of the way there. This could consolidate in this area before it comes back and hits that. And if it does, right, that's going to make this test more likely to hold than not. If it comes back immediately, it may fail. But if it comes back after 6 bars, odds are pretty good it's going to hold. And so today, what it really did is it came back into this big bar where the volume is. It tried to hold and bounce back up, but it couldn't, so it's into the bar. That says it's going to try to, drift on down here into the support zone and maybe into this retest regen zone. If it does that, that's going to help the European stocks, right? And it's going to hurt commodities and so forth. Although we saw a big bounce out of gold today despite this. But right now, I don't see this as a strong move back down. There was no volume in this today. And I wouldn't be surprised tomorrow to see it get a little bounce before it tries to trail on down there a little bit more. If we look at it over on the dollar, the back side of this, and say, okay, what did the dollar do today? The dollar got its bounce, but look at what it did. It came into that high, 25.14, got over it, back under it. This thing looks like it's going to try to pull back, which makes me think the FXE is going to get bid. And that's going to probably put pressure back on these markets again tomorrow, at least for a day. So if you ask me what I think tomorrow is going to be, taking a read of these currencies, it looks to me like you're going to get a little pressure. Nothing big, but a little pressure tomorrow. And so the odds probably favor some sort of a small retrace tomorrow versus a continuation. And again, if you glance back at those indexes, that's also what the indexes are telling us. In particular, the NDX and the Russell. Here's the NDX one more time. A very ugly reversal today. Closes at the low, and the Russell almost the same spot. So that's what I'm looking for tomorrow. We'll see how it pans out. Until then, I'm LA. This is and it was your daily NeoTA wrap. Have yourself a great night. I'll see you next time. Good night.